Hey guys, Alfred here. What's up, everybody? Welcome back to the next episode from Keys to Credit. If you haven't already learned, that's what we're going to go ahead and call this program, From Keys to Credit. And I'm your host, Alfred, with Summit Beacon. And I'm really glad you're tuning in today. We're going to cover a lot today. And if you've been following the podcast from the beginning, you already know what we've been laying out the foundation. We've been working on this Credit to Keys foundation. We're giving you some guidance. We're walking you through how to go ahead and prepare yourself and your credit profile so that you can get pre-approved for that loan. And we've been laying down the foundations that help you get financially ready so that you can buy your first house. That's what we're doing. So in episode 1, we talked about the mindset and the habits that lead to financial success. In episode 2, we learned how to read and understand your credit report because you can't fix what you don't understand. It's super key. And now, this is episode number 3. We're going to talk about one of my favorite subjects. It's how to build positive credit fast. I get asked this all the time. How do I build credit? What can I do? How can I get me going from A to B? There's different things you can do, but we're going to talk about that in this program. We're going to walk you through ideas, some steps, some different things you can do to help you get you prepared, get you in a position so that you can build credit fast, so that you can look really good for those mortgage companies and lenders. Now, whether you're starting from scratch or you're building or rebuilding a few tough years, I'm going to walk you through simple, proven strategies that actually work. And most importantly, it's going to prepare you to qualify for your dream home. That's what we want to do. We want to get you into that position. So let's go ahead and start with the basics, building positive credit history. We're going to start with the basics. So let me go ahead and share my screen. I want to go ahead and walk you through this program and get you into a good and clear understanding of what we're doing here. All right, so here we go. This is going to be your number one thing we're going to walk you through. We talk about is building positive credit history. That's what we want. That's what we want you to do. That's what you need to be able to learn how to do and how to get this all prepared for yourself, is building positive credit history. And you want to make sure that, so the first thing to understand is that your payment history, it's actually 35% of your credit score. Now that's the biggest chunk, right? Building credit isn't about tricks. It's about trust. Lenders want to see that you can borrow money, that you can use it responsibly, and that you can pay it back consistently. So the first thing to understand that your payment history does represent 35% of your credit score. That's a big chunk, right? In the overall grand scheme, this is the number one item that's going to make your credit score. So if you want your credit score to go up, make every single payment on time. Even one late payment can drop your score by 60 to 100 points. So what's the fix? It's automation. Set up auto pay on your accounts. Pretty much, as far as I'm learning, pretty much every credit account, whether it's your auto loan or your mortgage, you can set up auto pay. Set up auto pay in all your accounts, even if it's just the minimum. That one move can protect your credit long term. All right. That's your number one. That's your number one thing when you is building positive credit history, and make sure that your payments just make sure it's on time. Number 2 is what we want to call is a secure credit card, right? Let's talk about the security cards and then other credit builder accounts. If you're rebuilding or have no credit at all, these are your best friends. A secured card works just like a credit card. The only difference is you put down a small deposit, like $200 or $300, and that becomes your credit limit. You use it, you pay it off, and it reports to the credit bureaus. Then after about 6 months of consistent payments, your score will start climbing, because this shows good payment record. And you do want to keep your utilization low. And so let's talk about the utilization. Utilization is how much of the limit that you're using. 10 to 20% is great. If you can limit, so if your limit is $300, don't spend more than $60 at a time. That's just a great little tip right there. Now, the next one we want to talk about is what is called a credit builder loan. Credit builder loan is a great option. Companies like Self or Credit Strong allow you to make small monthly payments, like $25 or $35 on average, and they report your payments to all three bureaus. It's just a method. It's just basically an account that they set up. You submit a small little payment, and they report that you're making these payments on time. It's an easy way to show credit payment history and prove you can handle installment credit, which is different than revolving credit, like a credit card. So revolving credit is like a credit card where your monthly payment revolves on a month-to-month basis depending on your balance every month. That's revolving credit. This credit builder type of a loan is going to be what is called an installment credit, kind of like an auto loan. You know what your monthly payment is going to be like. If you have an auto loan, it's going to be, for example, $400 is your auto loan. It's the same every month. So these credit builder loans are the same thing, but they're very small, 25, $35, somewhere along those lines. And if you're just consistent, it just helps build your credit. The next thing is something that you can do is what is called becoming an authorized user. So let's talk about an authorized user. So if you have a family member or a trusted friend with great credit, ask them to add you as an authorized user on their credit card. Their positive history and account age can actually help build your credit as long as the account reports to all three bureaus. That's the key. You want to make sure the account that you're going to get put on actually does report to all three bureaus. Not every credit card, not every credit company reports to all three bureaus. So in this case, you're trying to build credit wide. So you want to make sure it's reported to all three bureaus, whatever account it is. This one strategy alone has helped many of my clients see 40 to 60 point increases in just a matter of a few months because they're being added as an authorized user. Now, there's a detriment to being an authorized user as well. If the owner of the account does not take care of their credit, then it also reflects on yours as well. So you want to be wise when you do this. Now, another thing is don't close old accounts. A big part of your score comes from the age of your credit. When you close an account, you lose that history. So even if you don't use an old card often, keep it open. Put a small charge on it every few months and pay it off. That keeps it active and reporting positive data to the bureaus. So if it's an old account that you just don't use, but you're making the payments it's just good to have old accounts if they're positive. You want to make sure that they're being reported as a positive history because that's what's going to help. And that's what's going to help build your score because it shows longevity. That's what you want. Now, another is a healthy mix of credit types, right? So having one revolving account like a credit card and one installment account and one like a loan shows lenders you can manage both. So if you can get a credit card, which is revolving credit, if you can get an installment account, which is like an auto loan, and then maybe another type of a loan, then it shows that you can handle several different types. You can handle the revolving loan, which varies month to month. You can handle the set loan, which is a set amount every month. When you show the mortgage companies that you can do this, it's fantastic. It shows strength in your responsibility. And the thing is, it's not about having a ton of accounts. It's about having the right account. So being wise on what type of accounts you're working with is what you want. You want accounts that report on all three bureaus, and then you want good mixture of accounts. You don't only want auto loans. You don't only want credit card loans. You want a good mixture. Now, the other item we want to talk about is too many new applications. So every time you apply for new credit, you get a hard inquiry, and that can lower your score slightly. So too many hard pulls too fast can make lenders think you're desperate for credit, which can actually hurt your approval chances. So you want to be patient, you want to space out your applications, and you want to build intentionality. I have this type of subject. This subject gets brought up to me quite often. I have clients that or people that want to be a client. They'll talk to me about their inquiries, and we'll look at their report, and they have a ton of inquiries because they're not understanding how this works. They might go to one car dealership and try to get a loan on a car, and the car dealership is trying to get them a loan. So they run like 5 or 6 or 7 hard inquiries looking for a bank to give them a loan, and they get denied. Then they go down the street to another auto dealership within a day or two, and they do the exact same thing. And lo and behold, within a few days, you have 20, 30 inquiries on your report, and it does not look good. So you want to be wise when you go and apply for credit and not have too many inquiries. There's forgiveness in a lot of mortgage companies. They'll give you some grace if you've had a couple of inquiries, but if you have too many, they are just not going to really like that. So you want to be aware of that situation. So with that said, there is a little story that I do have to share with you. And what that is that we've had clients coming in and out of our programs, and we've had people come in with different situations, but I want to share with you a quick little story that we had with one of our clients. Her name is Maria. She came to me with no credit at all. She had always used cash, and I get this quite a bit. I have a lot of people that only use cash, and they never thought about credit until they wanted to buy a home. And I think you can know that there's teachers out there that tell you to only use cash. Well, lo and behold, if you do that and you're only using cash and whatever your the means of purchasing power, and you want to get a home, well, typically homes cost hundreds of thousands of dollars, and most people don't have that type of cash set aside. So you need to borrow money to buy a home. This, let's put that in this example. You want to buy a home. Well, you're trying to go to the mortgage company, and you're asking them for hundreds of thousands of dollars on a loan. Well, they're going to see how well you handle credit. And if you never use credit or you don't handle credit, the chances are you're most likely not going to be able to get a loan because of you don't have credit history, and you don't have positive credit longevity, and you don't have a history of taking care of credit. So most mortgage companies will not borrow money out to you. So in this particular case, Maria, she came with me with that situation. She wanted to buy a home, didn't have any good credit. So we started her with one of our secure credit cards. It's small, but it's very powerful. And we put her also on a credit builder loan. She made her payments on time. She kept her balances under 10% and didn't apply for anything else. Just those products that we gave her some resources with. In 6 months, her score went all the way to 685 with no credit when she started. She didn't do anything complicated. She was just consistent. She stayed focused. She followed the plan, smart, small steps, and she built up a great credit history. And that's the power of positive credit building. It's not about speed. It's about discipline. And that's what you really want to work on. So let's talk about some action steps, right? Want to get you back into some action steps and get you going so that you can have something to fall back on. So with that action steps, let's talk about. Step one, you want to open one secure card or a credit builder loan. Start small and use it consistently. Step number two is you want to set up automatic payments so you never miss a due date, right? If you can get a secure credit card or a credit builder loan, put that on auto pay, and you're going to start building a longevity of credit history and credit payments. Step three is you want to track your weekly progress. You want to track your progress weekly. And I have a resource, I'll put it down into my notes below, where you can create an account and then you can track your progress weekly through this site. Now, watching your score improve keeps you motivated. So if you can watch your score improve over time, you're going to be on a good journey to good credit. And it's going to give you consistency, and it's going to give you power. So, and if you're ready to take that step any even further, go ahead and check out my courses or my program. I'm going to leave the links below, and you're going to be able to do this. I have a do-it-yourself, or you can call us and we can get yourself into a program where we do everything for you. We'll walk you through the exact steps to build and repair your credit on your own terms, in your own way, but we'll guide you along the way, and we'll help you so that you can get pre-approval for the home that you're working on. And so we're going to go ahead and wrap it up from Keys to Credit. This is your call to action. I want you to go ahead and work on those 3 steps. And I want you to remember that building credit isn't about luck. It's about consistency. It's intentional steps that can prove you can handle financial responsibility. If you got value from this episode, please take a second to like, subscribe, and share this with someone you know who is working on their credit. All the links are going to be in the description below. You can schedule your free review with me or one of our team, or you can start your own do-it-yourself program, which I also have available, or you can join, like I said, our full credit repair service that we can help you and do all this for you, and we can help you personally. So don't miss next week, where we're going to talk about how to manage your debt while preparing for a mortgage. This one's going to be huge. And again, thanks again for listening. My name is Alfred with Summit Beacon, helping you go from credit